What must your business do to flourish under the new tax regime? The introduction of the new Nigerian tax regime has generated a lot of noise, fear, and misinformation. This session is designed to strip away that noise and focus on what truly matters. How businesses can not only comply, but actually benefit from the new tax framework. The goal of this session is to give you, the owner of a business, you, a CFO, you, an investor, confidence, clarity, and peace of mind. That is the purpose of this presentation today. Now, I'm say something very quickly just before we start, that this session speaks to three categories of business owners. Number one, those already doing the right thing, but are worried about the changes. Number two, those who are unsure whether they are actually complying or not. And number three, those who avoid the system completely, who avoid the tax system completely. The message is simple. The new tax regime rewards structure, transparency, and proactive planning. And I think the new tax system does benefit your business. Let's look at this closely. The new tax regime is going to help build confidence with investors. So we have no reason why business people should complain. And that is why I'll be very high level so that this can easily be something business owners or entrepreneurs can really understand. I'll be very, very strategic in my conversation today. And in using that, I want to speak about the importance of being proactive. Is why I want to use a story of a farmer who hires a young man, a young farmhand, to help him keep his farm. In the interview, the farmer asked the young man, what are your skills? And the young man said, sir, you can sleep when the wind is blowing. This is not a good characteristic for somebody who is going to work in a farm, who needs to really wake up and must be able to move around when the storm is raging to ensure that the farm is kept intact. Because the farmer needed a hand desperate, he employed the young man like that. What we observe is that the young man, morning and night before he sleeps, he prepares the farm in such a way that if there is a storm, whether the statistics show there will be a storm or not, he keeps all the animals back in their barn, all the farm implements and everything properly kept in preparation for storm and well fixed. He does this for days and weeks. There will be no storm. But there was a particular night, there was a heavy storm. This young man was sleeping. The owner of the farm noticed this wind. He rushes out as he usually does to see if he can salvage anything from his farm and make sure that the animals are in their barn. Alas, everything in the farm was intact. He was astonished. Then he remembered the words of the young man. I can sleep when the storm is raging. Your business must continue to be on autopilot, even in the changing economic times or changes in tax regime or circumstance, and is a function of the structure you create for your business. So what does this say? It tells us that preparation is important, peace of mind is important, and structure to ensure your business can withstand any challenge. These things are vital if your business must survive. So let's start with what businesses were doing even before now. Now you must think about it, depending on the category you are, why we as a firm feel that there's nothing for you to fear about. Number one, you likely were collecting VAT. If your business is a VATable goods or service, you were collecting and you were remitting. Whether it's monthly or quarterly, you were remitting in one way or the other. Number two, to the best of your knowledge possible, to expenses that you need to deduct withholding tax from at source, you were deducting and you were trying to remit to the best of your knowledge. You were deducting the accurate payee from your staff salary and you were remitting and you were filing your staff salaries returns. You as a company at the end of every year, you file your annual returns and pay your CIT, company income tax, and other relevant taxes. You were paying other applicable taxes with respect to stamp duties and other simple taxes that you're supposed to pay. You were doing all of that. If you were doing all of that, I don't think there's a worry, particularly at this time. The issue we had in the previous regime was not the lack of law. There was weak enforcement, poor record, and inconsistency from the government. But with the current laws, with the new law that is coming up, things are going to change completely. So what is the shift under the new tax law? What is the shift under the new tax law that we are observing at this time? What is the shift for us to see? First is the Nigerian Revenue Service Establishment Act is now ensuring that there are stronger enforcement powers going forward. Number two, there is a Joint Revenue Board Establishment Act of 2025 that strengthens coordination between the federal and the states. There's a stronger bond. If you're a typical business, you find out that you currently do two audits, one for a federal and another one for states. In other countries, it is one GRA, one revenue authority that taxes you completely instead of you doing two audits. Right now, you can manipulate the FRS and manipulate the state board when you do your taxes. This is going to change based on the new tax law if implementation is well done. There will be increased data visibility based on the new tax law. I'm still wondering how the government is going to do that, but there's going to be a lot, really. There's going to be a lot, really. So when you look at it, really, I feel that there's no reason to fear. For sole proprietorship business, the business, if you've been doing what is good before, only your profit is exposed to personal income tax. So there's really nothing for you to fear. All you need to do is to keep keeping your books and pay the relevant taxes you are meant to pay. But what are the major changes, really, that are coming up in the new tax law, right? The biggest change is not that there are higher taxes, no. It is the visibility to your records that is not happening, where it will be tough for you to really lie. And if you lie, you must be ready to pay higher bribes, to the tax authorities. The new tax law is built around data, automation, and collaboration between institutions. And it's important we say that the system is now proactive rather than reactive. I can say for real that businesses that are structured, businesses who use correct consultants and firms are likely to benefit. Those without structure are surely going to be what? Going to be exposed. That is sure. I must put this, and just to say something that are very important based on the new tax law. Number one is there's zero company income tax payment for businesses that have revenue of 100 million and below. Currently, you just have to be 25 million. Once your business is 25 million and below, you will not be paying CIT. Company income tax is that tax, that 30% tax on the profits of the business. But now any business that is doing 100 million and below is free from such taxes. company income taxes or any related tax with regards to that. You can imagine that. That's a lot of savings there. If you choose to spread your business, you can decide to establish 2, 3 other limited liability companies and spread the business, particularly if you are still small, maybe 300 million, 400 million kind of business, right? So the current tax law is helpful. The law is also saying that for large companies, very big companies, multinationals, large companies that are doing 50 billion in revenue or are part of a multinational group, they're going to pay at least 15% of their net income. That's for business doing 50 billion and above. Minimum tax will be 15% of their net income. We see that capital gain tax will increase from 10% to 30% in this new tax law. Another important thing is the fact that the scope of VAT has increased. So VAT will now be extended to digital and cross-border transactions. There will also be stronger enforcement of stamp duties and withholding taxes. It is important to also mention something that is very critical with respect to this new tax law, and that is with respect to the issue of VAT, where e-invoicing becomes very important. That's one of the major changes and the major game changer. Typically, business should not have problem paying VAT, but a lot of people reduce their revenue to avoid paying VAT that they have charged customers. So if as a business you have been charging customers VAT, but you have not been remitting, and you underestimate your revenue in collaboration with your firm or auditor, now you are going to be caught, particularly if your revenue is above 5 billion. Now, and I'm sure over the years that will reduce, where normally for every invoice you issue, it must be an e-invoice, a digital invoice that already records it with the tax authority. It then means if that system works, where your system is connected to a server with the FIRS, like they do in many countries, in Ghana, in Kenya, with that case, you will not be able to doctor your revenue that your firm or your tax consultants have been helping you to do, except if you are willing to pay heavy bribes. Let's look at some of the things, the facts that people are, the misconception people are putting around based on the new tax law. There's the first one. They say that the new tax law will benefit those who operate limited liability company than those who operate enterprise business. That's what people are saying. Think about it. They said if your business is registered as a limited liability company, they say you will benefit more than those who are who have business that are registered as enterprise business, sole proprietorship business. What is the correct answer on this? Let's put the facts. The truth is, what works depends on the size, turnover, and how you operate your business. Small businesses registered as a company with a turnover of less than 100 million will be exempted from company income tax. Company income tax, that means you are taxed, that tax you pay on your profits, right? Will be exempted from it. You will not be paying any form of tax. But watch out for this. But if you are a 100 million naira business and you didn't pay company income tax, you will likely want to give yourself more dividend, more profits. Yes, and the profit will not be dividend to you. Maybe you have in your business, you don't allocate dividend. Maybe you made 20 million and you can decide to declare 16 million of that money as your dividend. If you receive that dividend, you'll be required to pay personal income tax on that dividend. That's the law normally, because you as a director or you the directors, you're going to share that amount of money. That amount of money must be subject to personal income tax. So at the end, it's complete knowledge of the law that matters to determine how you want to operate your business. As an enterprise business, you'll be taxed personal income tax based on the entire profit you declare. So it's just like a limited liability company now, right? If you did 90 million and your profit at the end of the year was 20 million, if you declare the whole profit and say this is your profit and you want to spend the money, you pay personal income tax on the whole of the 20 million. But if you choose to be wise and say, of this 20 million, I'm only declaring 15 million as dividend, is on that you are going to pay personal income tax on, while the remaining 5 million is retained in your books for running the business or for you to borrow from. Or you can decide to say, I will only take 5 million in what? 5 million in dividend that I will pay personal income tax on as a director of the business, right? While the remaining 15 million is left in the business as retained earnings, for which you can be borrowing money from your company, to be borrowing money from this one for your personal use that will be free from taxes. So it depends on you and the structure of your business. I'm sure this clarifies the point of whether it is better to be a limited liability company or a sole proprietorship business. The choice is yours. While for us as a firm, we typically feel that people should be structured. Maybe safer to you to have a limited liability company status. Because if you register as a limited liability company, you're going to get what they call tax clearance in the name of your company. But if you're a sole proprietorship business, you can't get tax clearance from the FRS because you can only get anything in your name. So if you look at it holistically, yes, it's safer to be a limited liability company, but again, the choice is yours. Another misconception of things people are confused about, they say that based on the new tax law, or even on the old tax law, they say that as a corporate entity, that it is better to settle the tax officer informally. You settle them informally rather than keeping proper books of record, because they say the tax system is wholly corrupt. People say so, that there's no way you can please the tax people. So they just be like, I don't even need to keep my books properly, I'll just settle. People don't even know their tax exposure. I must say that our view as a firm is different. From our experience in dealing with several small and medium-sized clients, settling tax officers is more costly than keeping proper books of record, meaning that it is easier from the clients who later come and work with us as a firm. They found out that what they were doing with the firms they were working with in the past, some firms, we're not saying all, and few corrupt tax officers, is that they think that they are paying money to tax officers for which they don't even know what they really owe. That's what drives them to meet us. And then we observe that people pay more. People pay more for having poor books and paying tax officers than keeping their books. So it's cheap to keep proper books and do the right thing than actually paying excessive settlements to the tax people. So what do we say? Keeping proper books of record, having basic knowledge of the tax law prevents you from being naively burdened with an amount higher than the actual tax you owe. The truth is, keeping records, documents, and remitting your correct tax will prevent you from being unduly exploited. And it's important that you know that. Now listen, see, it is when you structure your business well, you create a system, you will know the true worth of your business. You will know your real tax exposure. For instance, you create a system, you know that if your business is battable, charge VAT, factor it in your cost of goods. If you know it will affect, if your price will go higher, find a way around it to ensure that you still charge some form of VAT. Remit your VAT. The remaining taxes to be paid are easy to manipulate legally. You will use the loopholes within the tax law to avoid such taxes, to avoid paying excessive CIT, withholding tax, and all. It's possible to pay the barest minimum tax only if you plan. And truly, when we know that you may not be perfect, for the few areas you know you defaulted, you will know what your liability is, and you will be able to what? Defend it, pay it, or find a way around it. But at least you know your liability. Even proper structure makes it easy for you to defend your case with the tax authority. we know that the tax authority, the FRS and the LRS and some tax authorities, they are very used to giving ridiculous, ambiguous status. And when people see, they get threatened. People who don't even know their business, does not even know their revenue, already start jittering. But if you have sound structure, sound advisors, you will have no reason to fear or to worry. Business owners who have not kept their books or structured their business well, and who know that they have not wholly declared the true position of their business, typically go by the way of settling, not knowing that if they are giving more, that they don't even know that they have even given more to the very few corrupt tax officers, in our own opinion, than they would have paid if they did the correct thing. So what must you do if your business will flourish at this time? What should your business do to flourish at this time? One, you need to build correct system around your business. Tax proof your business. Make it audit ready. Critically evaluate your current financial system to be sure that you're giving maximum value to all critical stakeholders. Yes. Who are the critical stakeholders? You as the business owner, shareholders, your employees, the bankers, your creditors, and even the taxman is a critical stakeholder in your business. Plan your business such a way that all stakeholders are covered, and it can be covered. It's possible. Number two, critically evaluate that the financial system in your business is tax-proof in such a way that the business only pays the barest minimum tax, and it's possible. And you have zero tolerance to loopholes when audit happens, and avoid wastage in payment to deceitful tax officers who are going to be rampant in the coming years. Bring in a firm to work with your finance team to achieve the strategic goal of your business. Bring in a firm that can help you realize your goal or help you make this thing easy. This thing is easy. Really, you will have peace of mind if you structure your business well and not wait until when the year ends and then you are doing audit and discover that the business is not structured. No. Bring in a firm to help you structure your business in a cost and more efficient way. It's cheaper to do. I would say that it's important that this time that you should organize specific trainings for your finance team. If your business is big, or you can send them for trainings, or if your company is very big, you can get a firm to come in and train your firm based on the new tax law. This is the new tax law on general financial reporting, accounting standards, and the new tax law, working it in such a way that your business on your finance team understand the whole thing, just tax. Because don't forget, tax is a function of financial reporting. It's a function of the books you keep. And that is why your finance team need to have a sound knowledge of the accounting standard, latest financial reporting, and the tax law. You don't need to know even all. You just know as it affects your business, your own business or your industry. The next thing I think is important for is that business must choose the right structure that works for them. The right structure. Very important. You need to use the law legally to suit you. Choose the right business structure. Choose in contracting, do contract that suits you to pay the barest minimum tax. Structure your business, break your business where you pay lower tax. If, for instance, you are running a business that is totally revenue is 300 million. You can try to even break around 3 different companies just because you want to maximize this tax law. You can work things out to ensure that you pay the barest minimum tax. Other things you need to do is maximize your deductions and tax credits. If anybody have deducted withholding tax from your invoice, maybe money they were supposed to pay you, if they deducted withholding, it was ensured that they pay and you see the tax credit on your tax promax. Maximize your credit, including assets you buy. Another way to maximize this law is to time your income. When I say time your income, imagine if your business, if you've been keeping proper books month on month, and you say that it's almost 1 month to go, and my business is making 98 million. With 98 million, I will not pay any tax now, CIT. But we find out that there is an invoice that will come in, and it will jump the rent from 98 million to 110. You cannot delay that particular invoice, delay that particular payment to the next year, and do cash basis. So you avoid CIT rather than you allowing that invoice to come in and then you are now paying CIT on the whole. Time your income. It's planning. Imagine if you have been timing your business where you have been doing structure, you have proper structure. But even by the 11th month or 10th month before the year end, you're already seeing what the profitability of your business is. You can begin to see if you can bring in legitimate business expenses that will reduce your profits, or do things in such a way that you know that at the end you're paying the barest minimum tax. One other important thing you must do as a business, if you must survive, if you must flourish at this time, is to keep records, document everything, keep contracts. They're very, very important, really, if you must excel, flourish, if your business must flourish at this time. We feel that the 2025 Tax Act marks a shift from the usual panic. Rather than you panicking, I think is a function of being prepared. Tax is now real-time, data-driven conversation. Businesses, again, must invest in systems, documentation, and proactive engagement to reduce risk and unlock opportunities. And owners of business can sleep soundly when there is noise everywhere or when the taxman knocks at your door. That is our recommendation as a firm here at AideOne. Thank you.